It's been 2 months since the housing market really started to be affected by the pandemic. And so let's talk about that today and unpack the latest stats and trends for the Sacramento region. My name is Ryan Lundquist with SacramentoAppraisalBlog.com. This will be about 10 to 15 minutes, and I hope you get a ton of value today. So, what I want to do is basically jump in, and I'm going to show you a bunch of different visuals. Now, my visuals will show you listings, pendings, cancels, holds, and sales. I have some other stuff. We're really going to look at China and Italy, unemployment rate, mortgage rates, and so just hang in here with me. But if you like this stat table, this is basically what we're going to unpack in coming time. So here's what new listings look like in the region. You can see they were increasing, and then they really hit a sharp decline in mid-March once the coronavirus began to be taken seriously, once we went sheltering in place and such. Okay, and so but really, we've had over a month now where the market's beginning to recover. And so these are brand new listings. And so very clearly, sellers are getting used to the market. All right, 621 new listings this past week. That's down slightly from the previous week where we had 646. My sense was that last week sellers really rushed the market on that Friday, and we didn't have as quite of a rush this Friday, but it was a really strong week. Okay, now we're down about 13% of the peak right here. All right. Here's a different way to look at listings by the day instead of the week. And you can see 2020 in red by the week and 2019 in gray. And so I think the bigger trend is that this past week we're down 24% of where we should be. Or in other words, there were 822 listings last year this same week and 621 this week. And so there were really just over 200 less listings that should have been on the market that weren't. And so when you look at previous weeks, I mean, listings are typically down anywhere from 30 to 40%. Here's a look at pendings. You can see pendings began to decline when the pandemic hit. There was a 45% drop in just 3 weeks. And slowly, then we've seen a recovery over time. Now, last week, I noted that, wow, we really saw just a few more pendings compared to the previous week. And it's important, I think, when watching data to really to back up, and we need to take it week by week, but we don't want to read too much into just one week. But I'll admit that I did wonder, I wonder what we're going to see the following week, because if we began to see this go flat, then we would know that, okay, demand is more limited in the market, and we might see an issue if we don't have enough buyers out there. But then this past week, we saw more buyers play the market. Okay, from a percentage standpoint, here's sort of what it looks like. Very little growth, less than 1% the previous week, but about 8% more pendings this past week. All right, here's a look at pendings and listings. Pendings are in orange, and then new listings are in blue. I'm going to be converting most of my data to weekly data instead of daily now that we have 2 months under our belt, but you can see that it's really tight, okay? There's not that much of a difference. A few weeks ago, I had this Facebook post where I said, hey, we've got an issue because we've started to see more pendings than listings. Okay, literally here throughout the week, a couple weeks ago, there was literally one more pending than actual new listings that hit the market. Since then, we've got more new listings, but really it's very tight and very competitive since there's not that much on the market. Okay, 770 holds since March 12th. There's been 772 canceled listings since March 12th, which is a whopping 1,542 canceled and hold listings since that date. And so my sense is that some of these sellers are going to be coming back to the market, and it really hinges on how comfortable they feel. All right, people certainly have incentive to sell. They need to move, and they have so many reasons why they're going to be moving. But I think this comes down to comfort level with how comfortable are sellers with buyers walking through their homes. In previous weeks and for the past month, we've seen the comfort level clearly increase since we've had new listings hit the market, but I think there's a lot more that could be coming eventually. Here's a look at prices. So here's a weekly median price in Sacramento County in 2020 in blue. And it's all over the place. When we're looking at the week, this is kind of what it looks like. In 2019 in red, 2018 in green. But you could see that it's mostly been a little flat over this past month. In fact, when we look at the median price in March and April in Sacramento County, it's exactly the same at 400,000. But here's an interesting part. When we look at the median price in the region, week by week in 2020, the median price definitely has taken a little bit of a dip. Now, I say, and I continue to say, take weekly median price with a grain of salt because depending on what's sold that given week, I mean, it could be up, it could be down, depending on are we looking at high dollar properties, are we looking at, more under 400,000? And so we don't want to read too much into this, but we do see the median price in the region. Here's the median price since 2014, this real cyclical vibe where the market goes up in the spring and down, in the fall. But here we are going up in the spring, but we see that the median price basically dipped by 1% between March and April. Now, that's very uncharacteristic for this time. We don't normally see a dip like this. And so this is something we have to continue to watch. This could clearly reflect, a downward trend at some point. Okay, I still think we need more time to understand it. I wouldn't go out there and say, the market has reached a tipping point and, we're going down from here on out. We've got to continue to see what the story is and what the story of data tells us. So, a few more things. Let's look at sales volume in the region. When you look at April sales for each of these respective years, you can see that we had a pretty low April. Okay, in fact, and there are about 700 fewer sales this April compared to the previous year. And so we've clearly seen a huge difference in sales volume. Now, this makes sense because these properties represent pending contracts about a month or so ago. And remember, pendings took a 45% dip. And so when we're seeing about a 30% dip in sales volume, it makes sense to see a number that astounding. Okay, here's a different way to look at sales volume. This past week in the region, there were 341 sales compared to 615 the same week last year. And so really in a normal year, we should be the graph should have just gone up here, but instead it's gone down. Okay, and so there were 274 less sales this week. And so that's exactly why I've been telling my real estate friends that, hey, there are less deals going around because we've been in a pandemic, and it's so important to tighten up the finances and to work hard and to find people who do have incentive to buy and sell. All right, here's a look at April sales in Sacramento County, and you can see how low April was. And um, the monthly sales are in blue, but April is in black. And so when you look at April sales over the past 20 years, there was really just one April that was lower. And so we've had a, fantastically low April. Absolutely. Here's a different way to look at volume in the region. In 2020, here's weekly volume in blue, and then weekly volume in 2019 in red, in 2019 and 2018 in green. And so you can see that clearly in 2020, we've just seen a downward trend. Okay, it should be up here, and here's just over 300, just over 600. So, like I said, it looks like we are missing about almost 300 sales this past week alone. Let's look at China and then Italy, and then I have some closing thoughts on unemployment and such. So this is a graph from Mike Del Prete. You can find him at mikedp.com. Phenomenal research, but you can see that China, their percent of daily sales in 30 major cities. This compares to 2019. They really had a dip, and it went to almost nothing in February, and since then it's been multiple months where daily sales are back to where they were last year at the same time. And so how long will it take us to get back to normal, so to speak? To be determined. My sense is that listings and pendings are about 10% lower than where they were when the pandemic began. We're about 30 to 40% lower than where we should be with most metrics. It's gonna take a while. Theoretically, it would take a number of months unless something unhinges the market. Here's new listings during the lockdown in Italy, and you can see that when the lockdown began, 0 weeks to 8 weeks, there was a sharp dip, and then there's been a slow recovery over these past couple weeks. And so we've kind of seen a similar dynamic in our market in Sacramento and many markets where there's a sharp decline and then it's been a slow rise up. All right. One X factor right now in the market is mortgage rates. Look at 3.23%. It's absolutely incredible how low they are. Okay, this shows mortgage rates from the 70s to peaking out in the early 80s, and then they're just down tremendously right now. And so this is something that's really fueling the market. It's causing buyers to jump into the game. And I just saw some friends walking in my neighborhood last night, and they were telling me about a refinance refinance that they did, and they have on a 30-year fix, they said they got a 2.8% rate. That's just absolutely incredible. I thought for sure that was going to be a 15-year. Here's another X factor with unemployment. This is the unemployment rate in the United States from 1976 to 2020, and so it's absolutely astounding to see an increase to 14.7%. We were hovering just below 4%, and then now it's 14.7% when April stats came out this last Friday. And so just amazing. And I think it's so important to recognize that this represents real people who are out of work and who will be looking for work. And hopefully, what we'll see is that a lot of people get into jobs right away, and hopefully some businesses, instead of shutting down, will be able to recover. And so there's a lot of, I think, uncertainty right now with what's going to happen to the economy. All right, here's the United States unemployment rate in black, and then Sacramento County in blue. You can see historically from 1990, the unemployment rate really tends to stick to about, in Sacramento County, stick to about what it is in the United States. Besides when the real estate bubble burst, we shot way up, as did California, really broke away from the pack. But our data will come out on Friday, May 22nd. Okay, and so less than 2 weeks from now, we'll get a taste of what's the unemployment rate in both California and Sacramento County and surrounding counties. And so I'm thinking that if it mirrors the United States, I mean, we could be looking at an unemployment rate that's exponentially higher than it is right now. Some closing thoughts. We need time to see the trend. Okay, we simply do. We need days, we need weeks, and we need months to understand this market. Okay, we're starting to understand things more. We have 2 months of data, and it's incredible to watch what's gone on so forth, but we just need more time if we're honest. More buyers and sellers are entering the market. That's definitely been a definitive trend. Since we started sheltering in place, that was our lowest week for really both metrics, and we've had almost 6 weeks since then. And so more, I would say that the theme is that buyers and sellers are getting more used to this market. Listings and pendings are closer to pre-pandemic levels. Like I said, they're down about 10% or so from where they were at the beginning of March. All right, and so at some point we'll eclipse that. Sellers, we need more listings. There are a lot of eyeballs on the market. If you feel safe, I think now is an excellent time to get your property on the market. Okay, like I said before, most stats are still down about 30 to 40% of where they should be. All right. This is a profound thought, and then just a couple more quick things. But I was watching Mike Del Preti's latest video this week, and he was talking with a mortgage broker and how to talk with clients who are facing uncertainty and feel so uncertain about the market. And his suggestion was to replace uncertainty with data. And I thought that is such a great way to say it, because if people are like, I don't know what to do with the market and I'm not sure, where are things going to go? Look, we don't know the future, but what we do know is that we have data in front of us right now to say, well, here's what's happening with sales or listings, or here's a trend we're seeing with pendings. Here's what we're seeing with cancellations or holds. And so I would say replace uncertainty with actual numbers, and here are the trends. And so become a market expert by owning the narrative and by understanding the data that's happening in the marketplace. Two more things. I'd say that I'll have a big market update out this week. I'll have stats for Placer and El Dorado, Sacramento, and then the Sacramento region. And so be on the lookout for that. I will be parsing, different price levels too. Over time, that's my goal. I'll have some data out this week to show that, but otherwise, just be on the lookout. Be safe out there in all that you do. I hope you're well. We're in this together. Let's keep going. If you like this, give it a thumbs up. Thank you so much, and happy Mother's Day to all you mothers out there.